Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's May 15th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So much going on with tariffs. A lot of it's nonsense. The markets are down a little bit this week. Can address that later on. But for now, a much more important topic is the NBA playoffs. Holy cow, it's been awesome. Kawhi Leonard, that shot to win the series against Philly was incredible. Interesting fact. That shot that he hit, which is unbelievable, it's the only time in NBA history where a Game 7 was decided on the very last shot. Isn't that crazy when you think about it? If you didn't see it, guys, and we'll get to tariffs in the markets in a second, but again, it's a non-factor. I'll break that down later on. But man, so much going on in the NBA. That shot, Leonard going to the corner, shooting it over Embiid, who's probably about 10 feet long with his arms up in the air. The ball bounced on the rim, bounced on the other side, bounced in again, and then went in, which is crazy. It wasn't like a layup. It was like a long shot by the three-pointer, and it bounced softly, bounced again, went at the buzzer. Toronto went crazy. It was awesome. And I'm happy for Toronto. I had so many disappointments over the years. I just think because Lowry, DeRozan, great number two players. Really good players, but to be a championship team, you need a number one superstar. LeBron, Durant, Curry, which was pre-Durant, Jordan, Magic, Bird, Duncan, Leonard. And Toronto never had that, right? Until they traded for Kawhi. Now they can afford to pay him a fortune more than anyone else in the NBA. I suggest that they give him everything he wants because this guy is the most popular athlete in Canada since Wayne Gretzky. I mean, when it comes to athletes in Canada, it's kind of a pretty short list. Lemieux, Bobby Orr, Gordie Howe in hockey, Steve Nash. And then it falls dramatically to like Mike Weir. Then like Haley Wickenheiser. Believe me, most Canadians know who that is. I won't get into it. But Toronto now going to be playing against Milwaukee and the Greek Freak. Well, Milwaukee's amazing. And you have Golden State against Portland. Two things here. Golden State beat Houston in Game 6 to end their season. This game was in Houston. Golden State did not have Durant. He's out probably for the whole playoffs, I believe. And the loss was an absolute disgrace. For me, I think Houston should just dump every player, which is going to be hard because they paid Chris Paul the max, which is weird. But I'd dump every player except for Harden, including their coach. I mean, how do you lose that game? Just a horrible loss. They lose every single year. This is the year. Last year, again, they lost Game 7. Chris Paul got hurt. Now they had everything. Durant got hurt. They got lucky this time. They couldn't take advantage of it. And Steph Curry, got to give him listen. Got to give him props. An amazing second half during that game in Houston. And you have Portland, like Toronto won Game 7. They played against Denver. One of the best series I saw in the NBA playoffs in such a long time. I mean, just two teams grinded, killing each other, playing the right way. Hard fouls, in your face, no apologies. I mean, I hate the NBA now. And a lot of sports, right? Outside of hockey, where everyone loves each other. I mean, shakes their hands, they hang out together. I mean, Magic, Bird, the Pistons, Bad Boys. They must laugh when they watch the game during this era. But these guys are going at it hardcore, respect for each other. But, man, what a series. Anyway, sorry about the basketball intro. But the tariffs, you can read 5 million stories about it, and I'm going to address it later, like I said. I promise. I'm not going to be the one who just, oh, man, you got to watch out. Believe me, I'll break down a few. But just a little more about NBA here. And who's going to win it? Because I have Milwaukee beating Toronto in 5 games. Yes, I think Milwaukee's that good. I have Golden State beating Portland in 6. And I have Milwaukee winning it all, which I said at the beginning of playoffs. With or without Durant playing for Golden State, which would surprise the hell out of me if he plays. I mean, I saw the injury live, and it looked like he popped his Achilles. It happened with no one around. It looked like someone kicked him, and, man, he was hopping around. They're saying it's a mild sprain. He had an MRI. They're not even talking about it, but I'd be surprised if he's not out for the entire playoffs and maybe most of next year. Maybe it's not that bad, but, man, it looked bad. Anyway, happy to talk about NBA playoffs. Really super exciting, awesome. Again, so many people don't like the NBA anymore, but the playoffs this year have been unbelievable. Okay. Move on here. Get that excitement out of the way because I have a first-time guest coming on in just a minute. His name is Chris Wood. Now, Chris is a technology specialist, an analyst, over 15 years experience. Currently writes the Project 5X newsletter for Riskhedge. He has a great track record. Going to share some amazing ideas with you in a few, including several small cap names and one of his favorite tech trends in the world that he says investors need to have exposure to. Now, if you don't like Chris' ideas, if you don't like him and you're not happy with the interview, don't email me because I'm not going to say a word to him. Since Chris is a pretty big guy who played running back for the Texas Longhorns. So whatever Chris says is good with me. But in all seriousness, Chris has an economics background. His dad was also an economic professor. I mean, he's been doing this for a very, very long time. We have similar backgrounds following our father's footsteps, and just a smart, sharp guy, really down to earth. So really, really great interview coming up. Then, in my educational segment, I'm going to get real with you. Because it's something that I'm seeing, I'm going to say seeing a lot today, but even over the past 25 years. And it started, I've been seeing it, but now in the last 5 years, it's really, really built up. And it's something that's killing millions of mom and pop investors. I'm going to talk, well, I'm going to try to convince you, okay? It's going to be a big rant here, convince you why you shouldn't be listening to something, why you shouldn't be doing this. I'm not going to give it away. So I bet more than 75% of you listening to this segment, it's going to be impossible for me to convert you. And I say convert because this, what I'm going to talk about, is kind of like a religion. But trust me, it's an educational segment for the ages. Don't want to miss it. Going to throw in tariffs in there, which have it's a small component of what I'm talking about. But definitely give it a listen. And just to build it up, I'm not talking about exactly what I'm going to talk about. I don't want to give it away. It's very important here. But just know it is going to be a rant, and I'm going to be calling out a lot of people and not in a good way. And I hate doing this, but it needs to be done because they're killing millions of mom and pop investors. Coming up in a minute. But first, let's get to my interview with first-time guest, Chris Wood. Chris, thanks so much for coming on the podcast.
Frank, thank you for having me. It's good to be here.
Well, first-time guest, so I'm going to, stage is yours. You are a technology guy. You've been doing this for a very long time. More than technology, you really look to find early-stage disruptor stocks, things that are going to impact businesses, like the Netflixes, the Microsoft before they get really big. Why don't you talk a little bit about what you're doing, how long you've been in this industry, because you do have a fascinating story. It's kind of similar to mine since you're following in your dad's footsteps.
Yeah, I mean, I sort of grew up in the business valuation, economics, and finance world. My dad was actually a rocket scientist and then started doing security analysis and then got his PhD in economics and finance. And so I've been reading those books, for a very long time. And then my background in academically was, a degree in economics and finance, and went on to do business valuation, real estate appraisal for a few years, and then got into the analyzing public stocks, which I've been doing now for 12 years or so. And I started first. I was in the global macro area, and then there's just so much to be negative about in that area. I wanted to switch into something more positive, and nothing's more positive than tech. So since about 2008, I've been specializing mostly in tech stocks, a lot of small cap tech stocks, and it's been fun. I love it. This is to me the best time to be investing because of all the exciting things that are going on. Even though the market's getting crushed today or whatever, but that I'm not worried about that. That's basically in a nutshell.
No, that's really cool. And your dad was a rocket scientist. Talk about high expectations. I mean, it's probably even higher expectations than like Michael Jordan's kids, right? Although I'll get to the part later. It was going to be a lot of fun. I'll get to this part later, which is something that Chris did back in the past, and he probably knows what I'm talking about. Don't mention it because it's really cool, exciting. Much, much better than what you're doing now. But in all seriousness, so over the past 15 years, you've been doing this 15 plus years. You've seen a lot of innovation, right? We've seen, and especially in look, faster internet speeds provided, big data analytics to really go crazy, cloud computing, all this stuff. You've seen this, but talk to me about maybe the innovative front, because it seems like innovation is kind of lacking. And this is coming from someone that goes to a consumer electronics show. I've been there, I think, 7, 8 straight years. It just seems like the innovation is within the industries, right? So it's kind of like enhancing the current things. But what's your thoughts about overall innovation, maybe? Because for me, I'm kind of like, man, I wish last 2, 3 years is more about like AI and enhancing all this stuff and 5G and stuff, which is great and there's tons of money to be made. But I wonder what the next big thing is.
I mean, like you mentioned 5G and artificial intelligence. I mean, yeah, I see what you're saying about the way innovation is going, but I mean, we're really seeing. I mean, I think we're seeing things accelerate. Actually, I mean, but it's behind the scenes. It's not. It's not the. You go to CES and it's all about new gadgets and stuff. It's like, okay, well, we've seen all that before. The incremental improvements in these gadgets. But to me, what's really exciting is what's going on behind the scenes. Like what's enabling like these new cool technologies to really flourish, right? So if you look at 5G, the story there. I mean, everybody's talking about it as the biggest thing since sliced bread. Literally, the Qualcomm CEO said it was the biggest thing since electricity. It's going to bring us. It's being hyped by companies, governments, media, everybody right now. It's going to bring us lightning fast phones. It's going to enable things like virtual reality, augmented reality, self-driving cars, the Internet of Things, and everybody's going to get rich from it, apparently. But everybody's focused on the obvious potential winners. You're talking about providers like Verizon, smartphone makers like Samsung and Apple, the network gear makers like Ericsson, cell tower makers like companies like Crown Castle. And I think they're missing a big part of the story, and that's what's going on behind the scenes. And it's enabling all these things to come to fruition. And if I can just provide a little background on this, I guess. So wireless networks, like your current 4G networks that we're talking on right now on our smartphones, they broadcast signals through the air at specific frequencies on what's called the radio frequency or RF spectrum. Other services like TV, FM radio, and Wi-Fi, for instance, they also broadcast at other specific frequencies on the spectrum. So you have all these signals buzzing around the air all the time. And you have these little chip things that are called RF filters in your smartphone. They're tiny. They're like millimeter by millimeter. These filters basically they let the right signals in and they keep the wrong signals out. And without this filtering, all those signals would interfere with your phone and it just wouldn't work. You wouldn't be able to call anybody. You wouldn't be able to send an email or search the web. Anything that we can do on our smartphones today just wouldn't be possible. So these RF filters are beyond vital for smartphones and other mobile devices. And remember, there are billions and billions of these mobile devices out there. And they send and receive data using specific chunks of the RF spectrum in what we call bands. And so today, basically, smartphones need a lot of these filters, often several for each specific band. And so, for example, bands for things like voice, Bluetooth, GPS, Wi-Fi. And smartphones today support about 20 different bands, and they need up to about 60 of these RF filters. But the problem is that the spectrum we have available for these applications is already jam-packed. So, dropped calls, hopefully we don't have one today, for example, are a symptom of this. So 5G networks, they need to use bands at higher frequencies that we've never used before for wireless networks. And what this all boils down to, and what this all means, is that your typical 5G phone could need 200 or more of these filters. So that's triple the number of filters in today's phones. So we're going to see explosive growth in this market. I mean, it's like $9 billion today. It'll reach over $30 billion in the next 5 years. That's a conservative estimate. But it also means that these RF filter manufacturers need to figure out how to shrink the size and cost of these filters while improving performance. So, and that's one of the things I'm looking at right now, like how to, so who's doing that basically. And, I found a couple of companies that are doing it. One in particular is Acoustis, and I'm pretty high on this company. I like them a lot. They've actually developed this new technology to make filters smaller that improve performance and lower costs. So because we don't do that, we're going to have huge, expensive 5G phones and that have batteries that die in no time. And so this company Acoustis, these filters give you better signal strength, fewer drop calls, generate less heat, and they improve battery life because they draw less power. So they also allow you to use fewer filters because they can support more bandwidth, just a bigger piece of that spectrum, more that we were talking about. So that lowers overall costs. I mean, it's still early for these guys. They're $250 million company. They've got a great experienced team, and if they execute, which I think they can, there's a ton of room for growth there.
Chris, I want to say I want to say thanks so much for explaining that, because you could tell you've been in the newsletter industry for a while. Because some people would be like, oh, RF filters, get into RF filters, and people are like, what? Most people, right? That our audience is retail. It's not institutional as much, but when you want to explain these things, right? Because most people, and we have great listeners here who, just have their own full-time jobs who listen to us. But the fact that you explain that whole thing, because when I hear people talk about 5G, it's, tower, spectrum, infrastructure, which it could be RF filters. But to go that much into detail, most of the names that I do here are Qualcomm, American Tower, even Verizon and AT&T as large caps. Right. But let me ask you this. Is it difficult, especially, say, over the past at least 5 years for you, because you specialize in finding these smaller companies in technology and different areas, but specifically in technology, is it more difficult to find these great small companies that are publicly traded? Because what happens in the market today is, especially in AI, I mean, these companies have amazing technologies, and the balance sheets of whoever, just name any major technology company, are so big, they buy these guys right away, or they decide to invest in them. And then we have company, they stay private forever. And then finally, when they do come out, they come out multi-billion-dollar valuations like Uber, Dropbox, Lyft. So is it difficult to find lots of ideas? Or are you still finding avenues to find new ideas in the sector on the small cap?
Definitely. I mean, of course, you see all the numbers. Companies are staying private way longer. And yeah, you're right. The big guys are coming in, especially in AI. That's a big place. They're Googles and Facebooks of the world. They're just buying up every AI startup known to man. But there are ways for, I think, retail investors to still find these gems, these publicly traded gems. And everybody's got a sort of formula or or for a screen or something like that. And for instance, I've got one. It's an initial screen that I use to find specifically these companies. And it's a 5-point checklist or filter to really like home in on a publicly traded company that has a chance to produce big gains in short order from something that doesn't. And I call it the chaos system. Chaos disruption. That's what we're all about these days. So chaos is an acronym. It evaluates stock on 5 specific criteria. I'm talking about change, hype, acceleration, ownership, and size. And that's really how I weed things out initially. Then you've got, of course, you've got a more financial analysis after that. But this is a great way to really get down to, okay, what's got the real potential and what doesn't. So change, for example, is really the foundation of chaos and disruption. These small companies burst onto the scene and change things in a big way. And you got hype, which is basically looking for trends that are being hyped. Again, we can go back to 5G and artificial intelligence, and finding companies that nobody's heard about yet that are going to enable or benefit from those trends. Like if we talk about Acoustis, they're enabling 5G. They're one of the enablers of 5G. and they're a small company enabling big change. So an acceleration is basically about the potential for exponential growth. If you got 30% growth year over year, that's good, but 100% growth is how you really see big gains in short order. And then ownership looks at just that. It makes sense to go after companies whose founders, management, and board members have skin in the game, because their interests are going to be aligned with yours, of course. And you also want to follow great investors, like in biotech, for example. Great sector. I do a lot in that. The Baker brothers have a long history of making big money in that tough space. It is a hard space, of course. But so if you're looking at a biotech stock, for example, that checks all your boxes, and the Baker brothers also have just invested in it too, that helps reinforce your thesis, right? And size, I alluded to earlier. I think it makes sense to go after small companies that are going to shake things up in large markets, right? Because that's the easiest way to grow fast in short order. I mean, look, think about Netflix back in it started as a streaming service back in 2007, and but even if you didn't catch on to the story until just like 3 years ago, you'd still be up 310% plus. But now Netflix is what, $150 billion company. So it's a lot harder for a company of that size, to grow 10x, which would be 1.5 trillion market cap, than it is for 100 million market cap to grow into a billion market cap. So you put those things together, really, and it check all those boxes, and that's where you whittle down the list of 100 potentials that look pretty good down to 1 or 2 or 3, and then you dig in further. And so that's a system that I'm using right now, and I think it gives it also with retail investing, in these smaller companies, we have an advantage because a lot of the big institutions just can't go there because their trades are too big. So that's how I do that.
Chris, you brought the Baker brothers. It's so funny because I'm very familiar with them, and they're like the Warren Buffett of the biotech industry, but nobody really knows about them. And that's one of the things if you're looking at 13F guys, if you look at the holdings of certain company, of the biggest funds, I always comb through that to see if they're buying any small caps as a starting point, right? And then I'll look at it, and a name came up on that list with Baker brothers, and it was called Invitae. And I was like, what's this company about? And it was around $6 at the time, and started researching it. And Gene, it's all, it's a fantastic company, right? It's just basically analyzing your DNA, and they were basing it on volume more than pricing. So they have pretty much the best technology in the space. It's a massive market, and they're getting major traction. I start looking and going, wow, this is amazing. Loved it. Recommended newsletter. This is like 2 years ago. It's still my newsletter today. That stock's up. I mean, I think we recommend around 7, and it was at 23. It's around 20 now, but it's up around 250% for us. But it's amazing that you mentioned the Baker brothers, because when I see things like that, just a very large company actually taking a stake in one of these small things, they're not doing it, especially with the Baker brothers, they usually see things out, and they help these companies, and they make a fortune. They'll get warrants and everything, but it's not a short-term trade. It's not based on algorithms. And that's something that triggered that I was able to find Invitae for my subscribers, simply because that came up, and I'm like, what is this company? Never heard of it. So it's funny that you mentioned that as a way to find new ideas, guys. It's fantastic. But I wanted to go back to 5G really quick, because this is a trend you covered for a while, right? Everyone's covering it now, right? Because it's hot, but you've been covering it for a while. And since it's a major focus of yours, can you explain the impact? Because you talked about it a little bit here, but talk about the impact it's going to have to other existing secular trends, major trends like cloud, virtual reality, and augmented reality, the algorithms used for AI and big data, the Internet of Things, because I feel like that gets lost with 5G, where everyone talks about how do you make money off of 5G, and you have these part makers, but when you look, it's enhancing almost every one of these trends, right?
Well, yeah. I mean, of course, yeah. I mean, so say for virtual reality, for instance, because we don't have 5G right now, we don't have fast enough networks to basically have a good virtual reality experience that's untethered, which means just that it's unwired, right? Like, so I have an Oculus Go, and it's a fully self-contained system. You put it on, there are no wires, but and it's okay. It's fine, whatever. But it's just it connects, basically over a Wi-Fi signal, or you can go through a cell signal or something. But because of the speed, because of the amount of data that the 5G networks are going to be able to to carry, then you'll really be able to see a huge difference, and virtual reality will really come into its own. I mean, I was at the a virtual reality conference in a couple years ago, and the Oculus just came out with their they had these handheld things, and you put them on, and I played this football game, and it was tethered to a computer, to a really powerful, expensive computer, and it was a cool experience. I actually played a football game in it. I threw you could throw a pass, and then after you throw the pass, you turn into the receiver, and you actually feel the ball hit your hands. It's pretty impressive. But but we still can't get close to that with being untethered. And this is 3 years later, being untethered because of 4G networks just don't have the capacity, and there's too much latency, right? Like if you're in virtual reality and you move your head really quickly and the image doesn't track exactly like where your eyes are going and your head's going, that's called latency, and just a tiny little bit of that will make you basically get sick. I mean, early on, lots of people talked about getting, actually throwing up, spending after 30 minutes or something in virtual reality, and that's something that's going to go away because of the speed of 5G networks, and so we can all be. Then you can talk about augmented reality with augmented and virtual, in medical applications. The networks are going to be so fast you could use virtual reality, augmented reality to control a robot across vast distances wirelessly to perform surgery, and potentially giving patients across the world access to the world's best surgeons, without having to go anywhere. And so yeah, I mean, it's super exciting. I mean, yeah, and you're right. 5G is an enabling technology, it's going to enable all these cool things to come. And visiting a meeting in New York. I mean, I could be, if we had 5G right now, I could basically have a holographic telepresence and be sitting at a table with you instead of just talking over the phone. So yeah, I mean, that's what's exciting about it, more so than just having lightning fast phones. I mean, that's big. Obviously, you'll be able to download a movie in like a couple of seconds rather than a few minutes. But I mean, it's really those other applications that are make it really exciting.
You mentioned something interesting there when you said, when 5G is here, because a lot of people look at this trend and they say, 5G, and the last 3 years I've been going to Consumer Electronics Show, they started, 3 years ago it was 5G mentioning it. Last year it was everywhere, it was the biggest theme. And this year it was again a big theme. There's a whole process that takes place where, like you said, spectrum, and then you have towers being built, you have Verizons and everybody else with just building the entire networks, and now you're seeing it in certain cities. But when does the trend actually, I mean, it started, and you can make money on these stocks, obviously, but when is it official? Is it because I know the next generation of iPhones and Samsung are coming out finally with the parts that enable 5G, but is it this year? Is it now, hey, we're really going to see it, or is it still, 6 months or longer on? Because I know if you look at AT&T and Verizon, they're saying, yeah, we have 5G capabilities in certain cities. But when is it going to hit like mom and pop investors, mainstream, where it really, you're like, okay, 5G is here?
Yeah, you're starting to see it finally this year. It's actually coming up a little bit faster than even everybody thought, because usually the build outs of wireless networks are, you go through the infrastructure and then like the phones themselves, and then the apps, the services. But here, the infrastructure and the phones themselves, or whatever, the gear is happening at the same time. So it's a little different. So it's going to be probably a faster rollout. But I mean, I think 2020 is really when we're going to say, okay, 5G is here, and then it's widely deployed, within the next 5 years, and over the next decade will be everywhere. But that's why I think like right now is a great time to get into it, because yeah, everybody's talking about it. And there's a lot of hype, but you haven't really started to see those stocks top like you did in with the 4G rollout. Companies made fortunes also. If you look at the Qualcomm, Ericsson, Crown Castle, there were big spikes in the infrastructure companies involved with that, but 5G is just so much bigger that it's gonna. That I think the gains are going to be a lot more, but right now is I think a really good time to get into it, because you're right, it is still early, but it's happening very quickly. And there's a lot of countries are getting involved. You hear Trump talking about it. We got to win the war to 5G essentially, and China's pumping billions into it. So things are happening quickly, but you're right, still early on. I think in 2020 we can say, okay, 5G is really here. Maybe midway through 2020, something like that.
Let's end with this because this is more important than anything you said today, in my opinion. Okay, and you know where I'm going with this, but you are actually a pretty decent football player who played running back for the Texas Longhorns. Is that correct?
Yeah, that's true. I didn't get recruited that highly in football, but I was pretty decent, and I walked on to the Longhorns. It was Ricky Williams' senior season, and Mac Brown's first year, and it was a painful experience, but also one of the most fun experiences of my entire life. Running out underneath the compressed CO2 to 80,000 screaming fans, but it wasn't all glamour, right? I mean, I was a scout team tailback, so what that means is basically I would go up against our number one defense, and I'd run the other team's plays. So I'd, running into Casey Hampton over and over and over again. Casey Hampton, ended up being, I don't know if he's in the Hall of Fame yet, but, was a perennial Pro Bowler for Pittsburgh Steelers. And a lot of those guys went on to the NFL. But, wouldn't change a thing about it. Absolutely had a blast doing it. Only did it for a year, though, because, I might not be as good at doing analysis if I'd done it for 2 more. We got to start getting my head beaten in. But, it was a great time, man.
And real quick, Chris, before you go, someone wants to learn more about you. How can they do that?
Yeah, so the company is called Riskhedge, and website is just riskhedge.com, Riskhedge. And I'm the chief investment officer over there, and we have a great free letter written by Stephen McBride, our chief analyst, and that would give you an idea of what we're all about. And that's about it.
I appreciate it, man. So thanks again for coming on, and hopefully you'll join us again soon.
Absolutely. Thanks, Frank. Appreciate it.
Okay, it's great stuff from Chris. First-time guest. Told you he's a great guy. Very, very smart. Sharing lots of ideas. You can be a regular on this podcast if you like. But again, this podcast is about you, not about me. I want to put great people in front of you, great people that you want to hear from, great people that make you money. I vet everybody before I put them on. Not everyone gets to make it on our podcast. This isn't a sales podcast, so I'm throwing people out. No, I'm putting on people that can help you become better investors. That's why the podcast grows, because it's about all of us. We all want to educate ourselves. We all want to have a massive network, right? And it's building and building and building and building. This way we get the most accurate, best information, get information fast, get new ideas fast. You're seeing that in our newsletters. But again, this podcast is about you, not about me. Let me know what you thought of that interview at frank@CurzioResearch.com. Now, let's get to my educational segment. I didn't start off with tariffs because the whole world is talking about tariffs. You had my rant on it and said, don't worry, it's not a big deal. Now, I said China has to do a deal, and China kind of reneged, walked away. So we're placing 25% tariffs, some of their goods. They retaliated on Monday, basically saying, well, June 1st, they're going to place tariffs on our goods. And $60 billion or whatever it is. And now there's stories that are actually floating around there that they may sell U.S. treasuries. And that's kind of interesting to me, because this has been a selling point for every permabear. Say, China sells the treasury, the market's going to crash, it's going to be terrible. And when people just see they don't look, right? They just look at headlines. They don't look at the numbers. They just say, wow, if China does this, our market's going to crash. And they don't look at the details. Yet people don't realize if China decided to do this, that their economy will absolutely crash. Absolutely crash. And the permabears here are saying, well, our market would crash too. If China sells the U.S. treasuries, it's around 1.2 billion, or 1.2 trillion, sorry. They're saying our markets will fall by 70%. There's going to be riots in the street. Our economy is going to be done. I'm not exaggerating. Most permabears really believe it's going to happen if China sells U.S. treasuries. But let's dig in a little bit, because for China to do this, I mean, it'd be surprising, but if they do, they're going to basically collapse their entire economy and entire banking system. And I'm talking about total chaos, Great Depression type conditions. So if you look at China, around 1.2 trillion U.S. Treasuries. If they sell them, which, by the way, is not going to be a complete dump on the market. If you're looking at the current quarters, going back for 2 years, $200 billion worth Treasuries, liquidity. So, yeah, if they really wanted to dump all of it, it would take 12 to 18 months. Not going to happen right away. But if you're looking at the numbers, and we look at the U.S. as a budget deficit of around $1 trillion, right? So selling treasuries, the plan for China is to have our yields rise, bond prices fall, send the U.S. borrowing costs higher, and this is going to crush our economy, right? That's the gist of it, right? It's complete nonsense. If you look at China, U.S. treasuries are the safest, most liquid asset in the world. They'll be sold at an instant if needed, and there's going to be strong demand. And the Fed is comfortable buying treasuries. They have a printing press. They have other measures to stem the damage if this happens, like lowering rates like they did during the credit crisis. Again, we're going to see it coming. It's not going to take place right away. That's besides the point, right? No one's going to tell you that. They just think it's going to be dumped and that's it. No one's talking about that. Like there's huge demand. But it's never going to come to that, not even close. Because if China decides to sell its treasuries, where are they going to put this money? Email me, frankcurzioresearch.com. I'm curious where you think they're going to put this money. I have no idea. And remember, China, they're going to be a complete chaos if this happens. They don't do a trade deal with us. When you want proof, their market crashed 24% last year compared to ours 6% during this tariff nonsense. You want more proof? Look at this year. Their market collapsed by 6%, while ours collapsed 2% as of last week. And now this gets worse and worse. China's market's going to collapse much, much worse than us. And it makes sense because China placing tariffs on our goods, I mean, we don't sell a lot of goods to China. It's not even a factor. They can't threaten us with that. So now they're like, okay, how else could they threaten us? How else? Well, U.S. Treasury. By the way, selling U.S. Treasury, it's not coming from the government. This is just floating by different stories from different people. It's mostly BS. It would not be floated by the government because it's insane. It's just insane. Trying to do that. And their foreign exchange reserves, it needs to be in a liquid asset, especially in the need of stabilizing their currency. Having access to that liquidity is extremely important in case times are bad, and time is going to be completely shitty for China, especially if they continue to play hardball. Plus, if you look at the sale of treasuries, if it's successful, I mean by pushing up treasury yields, I don't know. I mean, you look at it, what else would happen? And a stronger yuan would weaken demand for China's exports, ended up reducing the U.S. trade deficit with China, which would actually be good news for Trump heading into an election year. But when you look at the details and you look at everything, China has zero negotiating power. I mean, placing tariffs on the goods makes zero sense since, again, we don't export a lot of goods to China. Selling treasuries, and we're going to find a way to absorb this, while China, if they do this, risks collapsing their entire economy and banking system. Let me tell you, China doesn't have the tools that we have to stabilize their markets. It will be a massive, massive collapse. So for this news to even surface, again, it's great news. It's a nice headline. It scares people. But when you look at the details, it wouldn't happen. And they have to be absolutely crazy. And if they do, we'll be able to absorb it. You see it coming. Remember when I talked about risk? If you see the risk coming, it's fine. This is something they can't just dump out of nowhere. And it's going to have to be in stages. We will see demand. We do have the Fed. Again, this is worst case scenario, but this isn't the end of the world type stuff. And it's just a joke. It's an absolute joke. It's like discussing nuclear policy, and if you shoot us with your nuclear weapons, we're going to shoot you with your nuclear weapons, and everybody gets destroyed. Although we're not really going to get destroyed if this happens. The market will come down. We'll absorb it. We'll find ways to do it. But at the end of the day, look, you're looking at China and the U.S. What would you rather be? And you want to be this rich country, largest consumer of goods, or a country that's selling these goods? Because if you're a rich country and you need these goods, you can get it from a lot of different places. And this doesn't work with China. Let me tell you something. There's tons of countries lined up to start making stuff that we'll buy from them. And we have plenty to offer them behind the scenes. But we have the money to buy this stuff. Who's China going to sell all their goods to? I mean, it doesn't make sense for them to play hardball unless, and you know, from what I see with the trade deal, it's not like an all or none situation and we're robbing them. We just want to make it fair. And there's a lot of pride here. There's a lot of stubbornness. But they can't afford to play hardball. So a deal is going to get done. But this point alone, right, is going to be the heart of my rant right now. Because when I first started in this business, there was always permabears. It was always crazy. But now it's social media. Now you could say something today and just get it out to the world immediately. We're in an entertainment type economy. Even though you deal with money, people still want to be entertained. Which is amazing. We're all built to be entertained, all of us, right? That's why we love to go in a movie. We're looking at our phones all the time. We need to be doing something. In the U.S. at least. I mean, we always need to be doing something. We always want to be entertained. But I never thought it would come to the same thing when it comes to your money, when it comes to this entertainment. And so many people have been taking advantage of that. And it's killing mom and pop investors. And I know you know what I'm talking about. I mention Peter Schiff all the time. I think Peter Schiff's a pretty smart guy, but he has an agenda. And he's been dead wrong since the credit crisis, 10 years. And what pisses me off is not that you're dead wrong. We're all going to be wrong from time to time. I mean, if you're wrong for a couple of years, you should get a new job. This guy would never get a new job. I mean, he'll move his operations overseas so he could do whatever he wants and, say whatever he wants, whatever. But what pisses me off is that everyone that listened to him got killed, but this guy's net worth continues to go higher. And that's pretty fucked up. Sorry to use that language, but this is important here. And you're looking at the dents of the world, right? You have to be very, very careful, guys. Especially, you buy newsletters, you buy my newsletters. If you're in the newsletter industry, you're hearing it from there's certain newsletter writers. The end of the world. Well, these gold bugs. Gotta buy gold, gotta buy gold, buy gold. All right, put 5% of your money in gold. I'd say about 1.5% of my holdings are in gold. Gold stocks, gold coins. But to say don't buy U.S. stocks, the world's going to end. ATM machines are going to stop spitting out cash. There's going to be riots in the street. I mean, you have to be very, very careful, guys. And again, I'm not going to convince anyone. It's like convincing a Democrat to try to be a Republican. It's like trying to convert your religion. Your beliefs are your beliefs, and that's it. But this is your freaking money, guys. This is your money. You're basing your decisions on what someone else is saying. And this isn't like, wow, I believe in this. This isn't like a Democrat or Republican, I believe in this message. This is your money. This is your livelihood. This is your generational asset that you're going to pass on to your kids, that hopefully they pass on to their kids. And you're trusting in people who have an agenda. And you have to be very careful of that. What do I mean? Let's get into it a little more. Well, let's take the credit crisis. I don't know if you knew, but everybody called the credit crisis. Everybody called it all of a sudden. Nobody knew when it happened. Everybody called it today, though. Oh, yeah, I told you, right? Everybody called it. Now, in 2009, markets started coming back after they hit the March low, 666 on S&P 500. And the Fed started going nuts, said, all right, we're backstopping everything. We're actually going to give consumers money to buy cars and houses. We take all the risk off the bank's balance sheets, all the subprime mortgages. Don't worry about student loans. Don't worry about car loans. Don't worry about anything. We got your back. We're going to backstop all of this, and we're going to invest in every single bank. AIG, we got you covered. Don't worry, you're fine. And emotions get involved, and you're like, wow, I can't believe the Fed's doing that. That's fine. You want to post your feelings on social media, go ahead. But when you look at the underlying trend and what's happening, the Fed backstopped everything. They took all the risk out of the marketplace and made sure that they did everything they can to inflate every single asset. Now look 10 years later. These are the facts. And that's fine. I got it in 2010 when I listened to David Tepper when he mentioned this on TV. I said, holy shit, that makes so much sense. I'm bullish ever since. We have a Fed that is behind making our stock market go higher, making our economy grow. Even the slightest whiff of negativity, we're not raising rates anymore. We're fine. Probably going to lower them next year now. Doesn't mean stock's going to go up forever. You're going to have risks, just like, tariffs right now, a little bump in the road before it gets fixed, probably a couple months. But my point here is that be careful listening to people where their philosophy is a religion. they continue to have the same message no matter if the facts change or not. And that's extremely dangerous. Because when the facts change, you have to be willing to change. It's just the way it is. Not every stock's going to be bad forever. Sometimes they're horrible, and they change everything within their company. New management team, new philosophy, getting into growth markets. For a person to say, I just hate that company. They're just terrible for the same reasons 10 years ago that pushed it lower. But yet, new management, new everything, getting into new technologies, totally different company. You got to revisit the thesis and look at it and say, okay, what's different? And unfortunately, with today's message and bashing the Fed and bashing the U.S. economy, bashing our deficits, they'll talk about our deficit, $21 trillion, without mentioning anything on the other side of the balance sheet. But they keep pounding this message despite having low interest rates, which, by the way, does have positive things, right? I mean, it does inflate assets, but easy money makes it easier for people to borrow. And, we have more unicorns today than ever. Yes, we hate that they come out of valuations like Uber and Lyft and they get crush investors. We don't want to see that. But it spurs innovation, new ideas. If interest rates were so much higher, do you think maybe we don't have electric cars? Who knows? Maybe a lot of this stuff doesn't exist today. But you have to take a step back and do the math. I told you about my fracking story where, the stories of fracking, when I went down, I thought there was going to be like dead animals everywhere. And I realized that this is all a hoax. By doing the research. But be very, very careful who you're listening to. Because the guys that I see on Twitter, it's a religion. And if people are shorting Tesla and they're like, Tesla's going to go broke, Tesla's going to go broke, Tesla's going to go broke. And it's a religion. You got to see their post 20 times. They're posting these stories all the time. And that's fine. They've been right. And yeah, Twitter's a lot of trouble. Tesla's a lot of trouble. But if your risk is like, they don't have enough money, and now they did a big capital raise. Now they have the money. So shouldn't your thesis change a little bit? Maybe not. I'm just saying there's a lot more risks. You have the tax credit come up. You still think it's going to come down. Elon Musk, great innovator, but really crazy. Running that company is pretty insane for all the tweets he puts out. I'm not saying that Tesla's not going to go up. I'm just saying if the reasons that you thought Tesla was going to crash no longer exist, then you need to change your mind. And that's on a particular stock. But I'm talking more about the market in general because I listen to people on Twitter. They've been bears since 2009, 2010. And I have to tell you, they're still bears. They've never changed. And more important, in their freaking head. And they're not doing it on purpose and they're not lying. It's their brain. It's the way they're wired. They think they've been right this whole freaking time. They really believe. I know. I talked to these people. The last 25 years I've been going through. I have interviewed over 1,000 people. A lot of these people I call my friends. They're good people. I wouldn't give them a dime to manage, and I don't put them on my podcast. But they do manage money, and I see them at conferences, and they're like, really? You think stock's going to go high? Like, it's the same message. I'm not saying you should be crazy bullish, but you've been so absolutely wrong, and not being able to take a step back and say, okay, why did I get this wrong? What did I do wrong? This way you could play a better message to the people who follow you and love you and try to make them money. No. It's pedal to the metal, double down, triple down, quadruple down. Markets crashes. If the market fell 60% from these levels, these assholes would still be wrong from their original projections in 2010, 2011. So guys, as mom and pop investors, just be very, very, very careful who you listen to. There's a lot of shit out there. And yes, it's entertaining, but entertainment does not mix with your money. I mean, Jim Cramer's entertaining on television, but he's providing substance. And you can like him or not, but he does the work. He has the top CEOs on there. And maybe he'll dress up like Captain Crunch to make it a little bit interesting, which is fine. But there's substance there. But you have to be careful of the people who are just wildly like pedal to the metal. They love to piss people off because, bad publicity is good publicity. You get tens of thousands, millions of Twitter followers. They jump into your funds and they're getting freaking destroyed. Yet, the people who are running these companies are making a fortune. They charge you fees out the ass. Well, you're losing your money. But that's the society we live in right now. It's that crazy, especially in the financial newsletter industry. But just be very, very careful. I mean, look, you listen to those guys, understand those guys, but they have to be willing to change. And so many permabears have not changed for 10 years. And more important, not only do they lose so much money from mom and pop investors, they go on and say, I told you so. What did you tell me? My portfolio is down 60%, 30%, 20%, well, the market's up 300% when I just could have bought money in an S&P 500 fund that charged 0.02%. Instead of paying you 5% of the way in, you lost me 30%. I want to take the money out of the account. You're going to charge me another 5% on the way out, and you're making a fortune. Guys, be very, very careful of this. There's a lot of assholes out there. I'm sorry to say it like that, but there are. And be smart. Again, 75% of this is going to be Frank. Don't worry about it. You're fine. I'm not going to change. I like these guys. That's fine. Do what you want to do. But hopefully, if I could just get 1, 2, 3 people to understand what I'm saying, being able to change with the times, have someone that's humble that looks back and says, okay, I was wrong on this, but here's how I can make a difference. Here's how I'm going to learn from it. But these guys are not learning from their mistakes. And you know what? That's really messed up. I don't care if they lose money. I don't care if they lose their fortune, but they're not. They're getting rich on the backs of you, mom and pop investors. And you know what? Stop making that happen, because those guys are definitely not worth it. Okay, guys, thanks so much for listening. Hope you're enjoying those playoffs. Really great stuff in the NBA. Also hockey. Go Boston Bruins. Doing very well. Thank you so much for listening. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.